This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And as usual, we have a very interesting and an informative and educational show for you today. So pay attention. So my standard question I always ask people is, what did school teach you about money? And generally some idiot will tell me, well, they taught me to balance my checkbook and they taught me about the economy and all this other garbage. And I go, that's not anything about money. You know, that's BS they teach you in school. And so, you know, everybody now knows that this generation right now, you know, from Xers and millennials and Zeds and all this other stuff, they're not going to make as much money as mommy and daddy. You know, I mean, why is that? When I was a kid, when I graduated from school, the day I graduated, I made more than daddy. You know, my daddy was making good money in Hawaii. He's making about $45,000 a year. My classmates were starting at $120,000 a year. And that guy had no idea what was going on. I was a little lower paid, $47K a year, because I worked for non-union oil companies. But this next generation, they're actually quite, I don't know, proud. They're complacent. I don't know. Why would you sit there and say, well, I'm not going to make as much money as mommy and daddy? I mean, to me, that's really silly because today there's more opportunity than ever before, but not if you just go to school and get your MBA. Because I'll ask the question again, what does school teach you about money? The answer is jack, nothing. You know, you're taught by a person who knows nothing about money. People like my poor dad, very good man, dedicated, highly educated, but they don't know anything about money. All they know about is a high-paying paycheck and a retirement plan and medical benefits. That's all these guys know, and they're teaching your kids. So today, the question is, what do you need to learn about money? And we have one of my favorite guests of all times is a fellow Hawaiian, Mr. Bert Dolman, somebody when I was a kid kept, you know, not a kid, but I was in my 30s. I just kept listening to this guy, Bert Dolman in Hawaii, because he was saying stuff that everybody thought was blasphemy. You know, he was saying stuff that he would upset everybody in Hawaii. And so he's our guest today. And so Bert and I will be the old guys, and we'll be teaching the young guys what you need to learn about money that school will never teach you, nor will a financial planner teach you. See, a financial planner is a salesman. And I don't blame them and all this stuff, but they're not rich people. Every financial planner I've met, I go, holy moly. I mean, you give people advice, but all they tell them is what to buy, what to do, but they don't educate them. So Bert and I are going to play old guys today, and we'll be teaching the younger generation. In our booth today is Sarah Shambo. She's the director of marketing for the Rich Dad team, but she's more on the tech side. You know, she's going to post blogs and tweets like Trump does, and stuff I don't know anything about. And she's the owner of Blah Blah LLC, and she is an entrepreneur. But she's got to start learning about money. So welcome to the program, Bert and Sarah. So Sarah, say hello first.
Hi, thanks for having me on.
Thank you, Bert.
Thank you for having me.
Yeah,
so we're going to play school teacher, but we're going to go basic fundamentals. You know, because when I read the Wellington letter, thank God I started when I was 9 years old. So when I read your stuff, I kind of get my own picture. I don't do exactly what you do because I'm not a stock guy. I'm a real estate guy who uses debt and I don't pay tax. That's my game. So I've been playing Monopoly all my life. But your information is priceless from the Wellington letter simply because you don't tell people what to do. You actually educate them as to what's going on and what you might be able to do. How did you start your financial education? I mean, you know, we've been doing this for most of our lives, but what got you started?
Well, I was always interested in making money. And so right out of college, my degree was in chemistry with a minor in physics because I never wanted to go into chemistry. But the business courses were just so lame, so useless. I said, I cannot do this for 4 years. I need something to challenge my mind. And so I always loved science. And I think that really helped over the years because we use quite a bit of technical analysis. That is our focus in looking at the market. Technical analysis is basically measuring the change in the flow of money. And that's the key ingredient. You don't have to look at, dozens or hundreds of economic statistics to find out where the economy is going or the stock market is going. In fact, there's very little correlation between the economy and the stock market, contrary to what Wall Street tells people.
Right. So, Bert, Sarah's got a question for you, okay? What is technical analysis?
It's the measure of the change in money flowing into the stock market or into a specific stock or commodity. It works for all markets. And that is the only thing that can move the price because it directly affects or measures the supply and demand. And only a change in supply and demand equation can change the price.
So the opposite of technical is fundamental. Do you know what fundamental means, Sarah?
No.
Okay, fundamental is the financial statement. That's rich dad.
Okay.
Income statement, balance sheet, statements of cash flow. Those are fundamentals. And what Bert is talking about is cash flow. And cash flow affects the rise and fall of prices. Is that correct, Bert?
Yeah, basically more than that. It's you want to measure if the demand is increasing or decreasing, and if the supply is increasing or decreasing.
Wait, but Bert, you're jumping into one other field. We've got to stay with fundamental technicals because you're jumping next into the next question is supply and demand, which drives all of that.
Measuring the supply and demand change is technical analysis.
What is supply and demand?
Supply and demand, it's a function of money flow.
Right, but what else does it mean? For example, see, what I'm talking about, Bert, is when I talk to younger people, a lot of this goes right over their heads. Because supply and demand means this to me. If you have 100 houses in a rental area, in a town, and Google's going to move into town, suddenly there's no supply and high demand. That's going to drive prices, right?
Exactly, and it's the same thing for stocks.
Right. And so I have a question then is we're looking at, let's say, real estate, like you just mentioned.
But it's anything.
Okay.
It's anything. Okay, go ahead.
I see my property value right now is the same as it was prior to 2007, to the crash, right? So what does that mean for somebody young? Should I be getting into a house right now, or should I wait until the next bubble?
Well, that's what I'm trying to say.
Yeah.
You have to understand the technical fundamentals and supply and demand. Those are the words of an investor. You see, jumping in is a financial advisor's term. Do you ever jump in, Bert?
I don't know what you consider jumping in, but I do my analysis beforehand. Right. If it looks like prices are going to go lower, I will wait.
Right.
If I like the investment. And, most people want to get in near top. After everything has been going up for a long time and so on, they want to jump in. Just like right now in the stock market. Oh, wow, new record highs on major indices. I'm going to jump in. And, the average person, I always ask people at a conference and so on, when they ask me, where's the stock market going? And then I ask them back, over what time period? Are you talking about 1 day, 1 week, 1 month, or 1 year? And then they say, oh, I hadn't thought about that. Okay. And then they throw out a number. Most people don't even know what their time horizon is in the investment that they're getting into.
Right.
You have to have a plan.
So, Bert, now we've come technical, fundamental. Fundamental is the income statement, balance sheet, and all this stuff. The technical is supply, demand, is how much money is coming in, how much money is going out, how much supply is available, and all this. So these are the things I'm looking at constantly. Today, our special guests are Bert Dolman, is a professional trader investor. He and I are fellow Hawaiians, but we have to move out of that state. We still have houses there, paying high taxes. But anyway, Bert is at dolmancapital.com. His letter is the Wellington letter. It's almost mandatory reading. Of course, a lot of people don't read it, but I look forward to it every single time it comes up because what the Wellington letter does is he educates me. The problem is a lot of times, Bert, the terms you use are not terms taught in school. So our other guest today is Sarah Shambo. She's the marketing director of the Rich Dad team, and she's going to be posting this for the younger generation to understand because there's a lot of people actually saying to me that your generation is going to make less than your parents. What do you think about that, Sarah?
I think it's true.
What the heck?
And it's
what
really
do you
it's
do
scary,
about it?
right? It's scary. The thing is where does somebody, I'm 37 years old, and so where does somebody like me get educated about technical and fundamental analysis at this point in my life?
Right, you're not going to get it from a financial planner.
Right.
In 99% of the cases. So that's why I want to plug Bert's letter, the Wellington letter, because Bert always takes the big picture view first. Mm-hmm. He goes big picture, which is kind of the fundamentals, the flows of things are going, and then he drops into the smaller picture. Mm-hmm. And the thing is, when you read the Wellington letter, you have to understand the vocabulary. You see, money has a language of its own. And they don't teach you this in school. They teach you the language of a school teacher.
Right.
So, Bert, you're also looking for migrations of people, like the Chinese are coming to Hawaii. That's really good for the high-end properties, right?
That's, again, part of the supply and demand relationship that we look at. Only supply and demand is important. You don't have to look at dividends and earnings and all of these manipulated statistics put out by Wall Street, like earnings per share of a stock, rising. But if you don't look at, what are the total earnings of the company, not the earnings per share. Wall Street is master at obfuscation. They love to just hide the true facts with the statistics that the financial media helps them put out, which are all phony.
It's all fake news.
It's all meaningless.
Yeah.
Yes, it's fake news. We see fake news in the politics. We see fake news in the financial media and so on. The whole thing is designed not so much for the individual. The individual is not really a big part of the stock market equation anymore. It's the money manager. There are so many naive money managers, and that's who they are trying to convince. And you have the financial engineering in the stock market, which is done basically like Apple, I think they're buying back about $140 billion of their own stock. That reduces the number of shares outstanding, which means that the earnings then are allocated to fewer shares, which means that the earnings per share rise.
Once again, Bert, we're going to take a break, but once again, it's Robert Kiyosaki of the Rich Dad Radio Show. We're talking to Bert Dolman. He's the author of Prelude to a Meltdown, The Coming China Crisis, which is still coming, and most importantly, his letter, which I love, the whole company loves, is called the Wellington Letter. And our other guest is Sarah Shambo, and we're talking about how does a person of Sarah's age get the financial education that CNBC, Bubble Vision, and those guys will never teach you, nor will your school teacher, nor will your financial planner. When we come back, we'll find out more how Sarah can find out more what I call real financial education.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Thanks for tuning in to the Rich Dad Radio Show. If you like what you're hearing, go to iTunes or Android, subscribe to the show, and leave a rating and review to help other financially minded people like you find the Rich Dad Radio Show. Thanks for tuning in and keep on learning.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android. And you can listen to all of our programs because they're archived at richdadradio.com, because our subject today is a very important subject. The question is, what did school teach you about money? And the answer for most people, from idiots that I talk to, is they taught me economics. Well, let me tell you, I studied economics, but it hasn't made me any money yet. And not that it's not important, but it's not really what money is about. Also teach you how to balance a checkbook. I mean, heck, I hire a bookkeeper to do that. You know what I mean? There's so, and the FICO scores. What does that mean? It means nothing. It means you're an idiot. You pay your debt off on time. That's all it means. So our guest today, our longtime friend Bert Dolman from Hawaii. He is the author of Prelude to a Meltdown, The Coming China Crisis. Bert has accurately called every financial crash coming. He gives you ample warning about a couple of days at least. But the thing is, most people don't know what to do when the crash is coming. You see, personally, from myself, being an old guy, I love crashes. I just think they're the most wonderful things. That's like Walmart having a 60% off sale. You know, it's just wonderful. But for the average person, it means their 401k is wiped out. They lose their jobs. They lose their house. It's not a wonderful thing. So our other guest today is Sarah Shambo. She represents the younger generation, and she is a member of the Rich Dad marketing team. She owns her own company, like everybody in Rich Dad is encouraged to do. It's Blah Blah LLC. So we're talking today what really is financial education. But it's not that garbage they teach you. Like a financial planner will tell me, invest for the long term. Are you nuts? Hey, Bert, would you just invest in a 401k for the long term for your financial security?
No, I think, the way most people think about long term is you buy a stock and you hold it forever. I don't think there's any stock that you can hold forever. I was speaking at a conference last year, and I was in a panel, and somebody said, all you have to do is pick a good company and then sit with it for a long time. And then somebody in the audience asked, well, give me a company. He said, like Microsoft. Well, I just happened to have looked at Microsoft a few days before, and in the year 2000, it was at the same price as in the year 2016. So you would have been sitting there for 16 years without any gain.
How about GE? How about GE? They just let
it's
go.
the same thing.
Yeah.
Yeah, or IBM. All of these companies, you cannot do that because managements shift. The company doesn't do anything. It's the manager, the top guy, who makes a company or breaks a company. Like Apple. People are crazy about Apple stock and the iPhone and the ecosystem, all this phony baloney, and people don't look at what's happening to the numbers. Declining sales, declining earnings, declining market share. I mean, this is a kind of company that you just want to avoid like the pestilence, And so it's a company that's pushed up by manipulation from the high-frequency trading outfit because it has one of the highest capitalization companies in the world. So you move up Apple 1 point, and all the indices go up quite a bit. So that's what it's all about. It's manipulation, and people fall for that.
Right. So Sarah, jump in.
Do you think that's one of the biggest misconceptions is that when I'm investing in, say, Apple, I'm investing in that product. And I think that's a misconception is that, no, you're investing in the people who are running that company, and you have no control over something like that. Would you say that's true?
It's 100% true. Yes, Steve Jobs died, and he's the one that invented the iPhone. And you tell me one product, one good money-making product that Apple has come up with under the new CEO. It's no longer new, but the current CEO.
Most people are afraid of a crash. And there's people like me who thrive on crashes, and other people are afraid of it. What would you say to them?
Yeah, I love crashes myself, just like as you said. In the 2007, let me just give this for instance. In 2007, I felt so strongly about a global financial crisis in 2008 that I actually wrote a book. And writing a book, as you know, is drudgery. But I said, I want to get this in writing. And the name of the book was Prelude to Meltdown. I was predicting a meltdown in 2008, and it happened. But at the time when the book came out, nobody wanted to believe it because euphoria was at its high. Euphoria is always at the high, at a top, at a market top. At a market bottom, people don't want to buy, and that's why, it's so tough being a money manager. We don't manage money. Money management is basically controlling people's emotions. People want to get into the market at a top, and they want to get out at a bottom. And it's very difficult to make money that way. Have you ever thought about that?
Well, yeah. So I'm hearing you guys say you love crashes, you make money in the crash. But what does a crash mean to somebody like me?
Well, you want to be out when the markets are high, and you want to be in at markets when the markets are low. But it's just like in real estate. There's an old wisdom. Now, I want to say that, excuse me 1 second. Most people think that you make money in real estate when the market is hot. No. The money in real estate is made when you buy, not when you sell.
That's with anything.
That is the wisdom. Somebody told me that, a very successful real estate developer, multimillionaire, told me that years ago. I was just out of college, and he was the biggest developer in Orange County, California, and he had moved to retire to Orange County, and he saw all the influx of people coming at that time, and he started building big apartment complexes. And he taught me so much. And he said, Bert, you make the money when you buy real estate, not when you sell.
So, Bert, the question for Sarah,
you buy it low.
Right, Bert. So the question for Sarah is, how does she even get into that knowledge flow? I mean, it's more than just when you buy. You have to know what to do when it crashes. So all these things. So what would you say to a young person like Sarah, or any young person, is how do you gain that knowledge, that information? Otherwise, you're going to listen to one of these financial planners who's just going to tell you invest for the long term or buy real estate, whatever they tell you, but they don't know what they're talking about. So how does Sarah find the information, besides the Wellington letter, of course?
Yeah, okay. But aside from the Wellington letter, how about reading? Young people don't read anymore. And I see this all the time. I ask people that interview for jobs with us and said, tell me about some books that you've read lately about the financial markets and so on. I said, well, I was on Google and I did this. No books. People don't read books anymore. Knowledge comes from books. And that doesn't mean that every book is good. No, not everything. Usually it's about 10 to 20% of anything is worthwhile.
What book would you recommend for Sarah to start with?
Listen, I could give you a list of probably 50 books.
No, but you know how
that would be too long.
You know how Buffett always recommends, I think it's Benjamin Graham's, and everybody has kind of a favorite book. So what book would you recommend for a young person, one or two, just starting out?
It all depends what area. If it's stock market or real estate or any other type of investment, there's so many different fields.
But what book would you recommend?
When I was in graduate school, and this was many years ago, I learned that fundamental analysis for stocks is a waste of time. And I said, there has to be something better. And then I came across something called technical analysis, money flows. And I said, well, wow, this is exactly what I've been looking for. Money flow is the only thing that can change the price of a stock. And there was only one book available at the time. It was written in the 1930s. And that was Edwards and McGee was the author. Now you've got thousands of books on technical analysis, and some of them are very good, like John Murphy's books. Read books from successful people. Successful people usually, that's the first starting point. If a person is successful, you can learn a lot from that person.
Right.
You don't have to reinvent the wheel, and you learn from the other person's mistake, because most successful people have had some tough times along the way,
right,
and they learn from their mistakes.
So once again, it's Robert Kiyosaki, the Rich Dad Radio Show. We're talking to Bert Dolman, old friend from Hawaii. The reason I am pumping financial education is his latest Wellington letter is all about financial education, not financial advice. Like he talks about what I call the pump and dump, where you push the prices up, you sell out, all the suckers jump in as the prices are up, and the pros come back in and buy it when it's low. It's called a pump and dump. Bert also talks about the delta and PE and prices and how money flows increase prices. He talks about Trump.
Can I ask you about PE? What is that?
1 second. So let me just say this. This is where it begins. It's a very good question. You have to understand the language of money. So Bert, really quickly, answering Sarah's question, what does PE mean to you?
Price of the stock divided by the earnings. And that's how you get the price-earnings ratio.
What does it mean to you?
Well, for example, on the Standard & Poor's 500 index, which is 500 stocks, the PE right now is around 26.
What does that mean?
It's very high. Historically, it's very high.
That means
that stocks are overvalued.
Let me ask you this. Does that mean that it'll take 26 years to get your money back?
There you go. Very good. See, just to get your money back, you don't have any return on your money. You only have the return of your money.
Right.
In 26 years. So after 26 years, you say, okay, I've had that stock now for 26 years. Now I can start making money.
That's what.
You have a stock like Amazon. The PE is 184. So it'll take you 184 years just to get your own money back.
That's what it means.
That's unbelievable.
Yeah, and people all like, so what's a high PE? And I go, are you nuts? Are you nuts? You know what I mean? The other question is delta, because you're talking about here the delta. What does delta mean to you? Because that's and I always speak of the delta. What does it mean to you, Bert?
Well, delta is just a mathematical symbol for change. That's all it means. Change.
And that's what you're watching, right?
Change is the only thing that's important. You don't want to look at absolute numbers, really. It's the change that's important in the market.
And this is where
so all the economists forget.
This is where your pump and dump comes into play, the manipulation.
Yeah. Or also, but Bert writes about it in his Wellington letter, which I want everybody to subscribe to, because if you want to get smarter, this is a book, this is a letter to read. But most importantly, what Bert is watching is the delta, like the Chinese moving into Hawaii, New York, San Francisco, and those cities. That's very important information. Right, Bert? That's delta.
Yes. Absolutely, it's this is again a change in the status quo.
Yeah, you don't invest for the long term.
Bert,
we gotta go to break. Bert, we gotta go to break. So this is a wonderful thing, but I'm stimulating people like Sarah, the younger generation, to read your Wellington letter, available at dolmancapital.com. And then have a dictionary and look up these words, because that's how you get richer. When we come back, we'll be asking more questions about what Bert looks at, which is real financial education.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Rich Dad Coaching offers a phenomenal variety of services and custom strategies, all aimed at ensuring a secure, comfortable, and rich future for you and your family. Now you can get weekly access to exclusive Rich Dad coaching services through our live stream events. Go to richdad.com and click on the On-Demand banner at the top of the homepage. Great new videos are updated regularly. Get inside knowledge and insights from Robert Kiyosaki himself, Rich Dad coaching professionals, and more. Go to richdad.com and click on the On-Demand banner at the top of the homepage.
This is the Rich Dad Radio Show, the good news and bad news about money. Here's Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. I'm salivating, waiting for the next crash that's coming. But more than just waiting for the crash, I know exactly what I'm going to do when this baby crashes, because what I've been practicing for this. It's like a running back. When in a football game, they see an opening, they can't say, well, now what should I do? The hole is open. You got to get through it quickly. So once again, you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes and Android, and all our programs are archived at richdadradio.com. We archive them, so you go to richdad.com, listen to this program again, because you listen to it 2 or 3 times, an investment of 3 hours maybe, you'll be 1,000% smarter than you are right now. So anyway, that's archived at richdadradio.com. Our guest today is old friend, one of the most popular guests on the Rich Dad Radio program is Bert Dolman, professional trader, investor analyst, and founder of Dolman Capital Research. He's been giving his analysis and forecast to traders to investors for over 36 years. And his most infamous letter is called the Wellington letter. Some of my friends read this letter, they get very angry at him. But anyway, because they're always going along the stock market, and Bert, doesn't subscribe to any stupid fundamental like that. But anyway, Bert's website is dolmancapital.com. Our other guest is Sarah Shambo. She's a younger member of the Rich Dad Company. She's a Rich Dad marketing team, owner of Blah Blah in LLC, which is encouraged to do. Everybody in that company is encouraged to be an entrepreneur. Now, when we went to break, where we're talking about PEs, and Sarah says, I never knew what a PE meant. You see, in every industry, there are words, there is vocabulary. So a guy like Bert will listen to PEs, whereas a real estate guy like me is looking at cap rates. So, Bert, what does cap rate mean to you?
Well, you could probably explain that better than I can. But a low cap rate basically is what you get the return on your capital, and it correlates very much with the interest rate levels. Now we have the lowest historic interest rate levels globally in history
of the world. Of the world.
Years.
Of the world.
Yeah, the worldwide. So You have very low interest rates. You have very low cap rates. That means that prices are very high because the price is a function of the income stream.
Right. Cash flow
of the property.
Right.
So the cash flow is low right now compared to the price. That's all it means. In the stock market, everybody looks at PE ratios. I don't think it has any relevance to making money.
No,
and here again, I'm probably very much alone in that view.
Right, and cap rates mean very little to me. When somebody's whistling off cap rates and all this, that's not what I'm looking at. I'm looking at interest rates.
And will we see interest rates on the rise soon? And what does that do for the?
No, you see here again. You want to do if your view, if your opinion is like everybody else's, you know you're going to be wrong. Okay, and so when everybody finally starts adopting my view on the market, I said, okay, I'm going to have to revisit it, and something is going to go wrong, and I'm going to have to change my opinion. I hate to be in the majority.
But
that's contrary to most people.
So Bert,
feel so comfortable to be in a majority.
Bert, would you call yourself a contrarian?
Absolutely.
What is a contrarian? See, that's another vocabulary. Somebody says, "Well, I'm contrarian." When you hear that, what does that mean to you?
It means that my position is that contrary to the majority.
Yeah, you're watching
that's the only way you can make money in the market.
Well, but another flow is where the crowds are running to, right? And so if the crowd's all running into Apple, you say, I'm going to get out of Apple. Is that how you think?
Right. That's exactly right. When everybody's very positive on a stock like Apple as right now, you know it's going to be wrong. You know it's going to be much, much lower later on. So you always want to do what the masses are not doing. Basically, the way great wealth is made in the world is you buy when everybody's selling and you sell when everybody is buying.
And so that means, Bert, you have to be very careful who you get the news from, right? The information from.
Absolutely. Oh, absolutely. You don't want to get anything that's conflicted. For example, we don't manage money. The only thing we do is we sell our research and forecast via subscriptions. So we have no conflict of interest whatsoever. Whenever you get somebody on TV, on financial TV, telling you buy the stock and so on, always ask, what do they do for a living? Do they manage money? Well, if somebody manages money, they already have a conflict of interest because they can never be negative on the stock market. Otherwise, all their clients would leave.
Right.
Okay? So they always have to be positive. If somebody from Wall Street is positive to the market, he's not even allowed to say anything negative. You know, everything that an employee of Wall Street says in the media has to be approved beforehand by the company and by the stock exchange.
Did you know that, Sarah?
People don't realize that.
No, and I think that's the biggest problem with the younger generation is that's where we get our information from is by listening to the fake news, right? And even more, we live in a world of 140 characters of Twitter,
right?
Which means, back to Bert's point, nobody's reading. We're seeing 140 characters and taking that as fact, as gospel.
And can I say something about Bert's Wellington letter because I want you guys to buy it? Bert uses pictures. He uses facts, not opinions. And that's another big distinction, right, Bert? When somebody's talking to me about something, I want to know if it's a fact or an opinion. What do you say about that?
You want to look at charts. And now I see, I think I put it in this last Wellington letter, even they're using charts now to lie with the charts. They change scaling. It's incredible. There's this chart of housing prices and housing sales. And on the same chart, and the scaling is totally different for one than the other. It makes it look like one is much, much less than it really is. It's incredible. I mean, there's so much lying going on.
Right.
You really have to have a source that is trustworthy.
Well, but also
has been with us for 24 years. 24 years. That is an unprecedented loyalty in our business.
Right. Other thing, what people don't know about charts, you just change the scale. You know what I mean?
Yes.
Another thing you wrote about here is unemployment. What does that mean to you?
Well, unemployment, now everybody's talking a shortage of employees. Hey, we had a shortage of capable or qualified employees 3 years ago, 5 years ago, 6 years ago.
But
the shortage has been there all along. But the key is qualified employees. There are a lot of people that come in for an interview just so that they can tell the welfare company, well, I'm trying to get a job, but there are no jobs out there.
And is that this Is that this U6 number you're talking about? That's
the U6 number is the good number. The one that the headline number is the U3, which now says what 4.4% unemployment, which is total fiction, and but the real unemployment number is around 8.6%.
I want you to listen to this. Okay, it's that our government lies to us. If you understand that, so now Sarah is more highly educated. She knows U3 versus U6, right? The number is U6. You want to look at?
The U6 is the number nobody talks about.
Yeah, and it's the real unemployment number.
Yeah.
So anyway, one more thing, Bert, you talk about here about Delta. And the reason the stock market went up so high from 2007, 2008 was money was flowing in. And you say that they're going to start reducing that money flow. Is that what you're saying?
Yes. The Federal Reserve, here again, the Federal Reserve is usually wrong. And so when they say, interest rates are going to go up and inflation is going to go up, you can bet that the opposite will happen. And in fact, going through the last 40 years of our existence in the market, we always used to use Alan Greenspan, who eventually became head of the Federal Reserve, as a contrarian. When he said there's not a recession in sight, we knew that we were probably already starting a recession, or there was definitely a recession ahead. And that is not to say anything bad about him. It's just that I think he's a very intelligent guy, but he had his own conflicts of interest. Who were his clients? The big Wall Street firms, etc. So it's just you always have to say, where is the guy making his money? Where is the conflict of interest?
Once again, Robert Kiyosaki, the Rich Dad Radio Show. Our two guests today are Bert Dolman. He's a good friend from Hawaii. His website is dolmancapital.com. And our other guest is Sarah Shambo. She's a member of the Rich Dad marketing team. She's going to blog and tweet and do all this stuff for us to wake up her generation. Because you said your generation is interested in what right now?
So I had mentioned, Bert opened the show with, he got into financial education because he was interested in making money. And I said...
One of our kids.
And I said, our kids, their number one thing is environment. Number two is social justice. And number three is money, which is why they're not interested in financial education.
And most people aren't.
Yeah.
You know why? Because your school teachers aren't.
Mm-hmm.
There's some of the most, my whole family school teachers, and they still think the love of money is the root of all evil because they got a pension and they got benefits.
We did a study here at the office for keywords, and with the younger demographic, they don't like rich or wealth. Those two words turn them off.
Right, because they went to school.
Which makes it...
It's incredible, because the alternative to having money is to be poor and live on welfare. Now, is that better?
That's easier.
What do you contribute to society when you are on welfare? You are a taker, a user at that point. You are not a contributor to society.
Well, but they don't care because everybody's going to take care of everybody.
Yes, that's right. Money comes from heaven, right?
Yep.
Right, and then, but also what was funny was Sarah walks in here, and then, I'm known as a grumpy old man around this place. And she said, "What about Elon Musk and Tesla? Everybody loves him because of this." And I just go, "So
I don't know if I can repeat verbatim what you said, but it rhymes with a duck, Elon Musk." And I said, because here's the thing: my generation thinks that the innovation that Elon is coming up with is going to save our country, is going to save them. But what they don't understand, what I found interesting in the Wellington letter, is he's totally subsidized.
Yeah.
By us. I'm paying his salary.
And that's why Robert Kiyosaki doesn't pay any taxes, because I'm subsidized too.
Right.
You see, to me, that's financial education. How can I get the government to give me free money?
Yeah.
I think that's more important than what, Elon Musk is a battery guy. No doubt he's good. He's a brilliant guy, SpaceX and all this stuff. But the question is follow the money.
So I have a question for Bert, though, is with Trump not signing this Paris Accord, and you mentioned in your letter that he's going to probably pull subsidies from a lot of industries, how is that going to impact us right now, if that in fact happens?
I think it's very beneficial. That Paris Accord would have been devastating for the United States. It would have cost the U.S. $3 trillion with a T dollars over time. And this was just to get the temperatures of the globe down over an 80-year period, down 0.2%. I mean, that's very expensive for 0.2%, and nobody even knows if that is good or bad. There's nothing wrong with a warmer climate. The worst times throughout history and the greatest famines have always occurred during global cooling. Okay, you have famines because you have short growing seasons. There isn't enough food being produced to feed the people, and you have these huge famines like in Ireland, etc. People forget this. They say, "Oh, global warming is bad, so global cooling must be wonderful." No, global cooling is terrible for people. The periods of the great, like the Renaissance, if you look at history, but of course nobody reads anymore, but if you look at the period of the Renaissance, that was a period of global warming. There were no SUVs to cause that global warming. If politicians could change the orbit of the sun and the outbreaks of the solar flares of the sun, then they might be able to change the temperature of the planet. But the politicians can't even find their way to the bathroom.
Hey, so Bert, I want to thank you once again, your Wellington letter. What other services does Dolman Capital provide for professional investors, not passive investors?
Yeah, we have two terrific services there daily for active traders. And one is for stocks. It's called Smart Trader. And the other one is the Fearless ETF Trader for ETFs. So we play both sides of the market. And like in 2008, for example, during the crash on September 4th, we recommended 5 ETFs which are designed to rise in price as the sector declines. Those 5 ETFs had an average gain of 72% over the next 6 weeks. 72%, while everybody else was going broke during the crash. Our subscribers that followed the advice made big money. That is what you want to do. You want to know how to make money during times of adversity. Because, have you ever noticed that stocks go down much faster than they go up?
But jobs go with them, too. That's the problem,
Yes, jobs go with them. So you want to have a valuable commodity. The investment markets are the greatest engines of wealth accumulation. But, of course, if you don't think that wealth is important, that it's evil, yeah, fine. Live on food stamps. It's I guess you can buy caviar and champagne on food stamps.
Or move in with mommy and daddy.
Member of society. Yeah.
Move in with.
But we were talking about. There was one thing I forgot to say. We were talking about books before. I wrote a book about the 2008. It's chronological order. It starts January 2008 to December 2008. About what Wall Street was telling investors during the time. They were very bullish. And what we were telling our readers in the Wellington letter, and it has the charts and how the charts are interpreted, how we said exactly the opposite of what Wall Street was saying, and of course what we said then came true in the fall of the year, etc. This is a great lesson for people, and we call it basically the guide to the next market crash, because all crashes are very, very similar. And what Wall Street tells you to pull the frog screen, to really make you forget that all the bad things that are starting to happen, that they're important.
Bert,
at the same time.
Bert, what was the name of that book?
Apocalypse.
Bert, what was the name of that book again?
Financial Apocalypse.
Financial Apocalypse. That's the book.
That's the book.
Okay, and how?
Yeah.
Is it available on Amazon?
It's on Amazon, and we have a website as well for that.
So that's how you get some financial education, is because what we're trying to say here is if Wall Street's educating you, your financial planners educating you, your bankers educating you, you're getting bad advice. Would you agree with that, Bert?
Yes, absolutely.
So once again, I want to thank you, my friend. You're always the best. Please get his latest newsletter because it's really about financial education. It's about what I call pumps and dumps and then Moody's ratings and things like this. And I have sitting at my desk as a financial dictionary. And that's how I get smarter, because if I don't understand the words, I don't understand what the guy is saying. And also our guest is Sarah. She is the head of the Rich Dad marketing team, owner of blah, 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 Sarah Shambo at gmail.com. Any comments for Bert right now, Sarah?
Well, I just want to thank both of you for having me on, and hopefully we can start educating the younger generation. I know we try every day, but It's pique. We have to pique their interest and get them interested in this for it to work.
Sarah, you have sitting next to you there Robert, who's one of the greats in real estate, and you can learn a lot from him.
Thank you, Bert. I'm actually a teacher. I'm not everything I hate. But anyway, I'd like to teach. I have good advisors and good friends. That's the key to success. So thank you, Bert.
Very good.
So
all right, thank you very much. I wish the best of luck to all of your listeners.
Thank you. So we come back, we're going to ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.
The key to achieving your dreams is to develop a rich mindset instead of an excuse mindset. Instead of saying, I can't afford that, ask yourself, how can I afford that? It's amazing how a simple shift in thinking can open a world of new ideas and endless possibilities. Let the Rich Dad Company help kickstart your journey to financial freedom. Robert Kiyosaki and the Rich Dad Company have compiled Robert's top secrets to creating a rich mindset, now available in a 10-minute ebook, How to Achieve a Rich Mindset. This offer is available for a limited time only, so get yours today. Get your free ebook, How to Achieve a Rich Mindset. Go to richdad.com and look for the banner. Again, this is available only for a few days, so act fast. Go to richdad.com and look for the How to Achieve a Rich Mindset banner.
It pays to listen. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, I want to thank Bert Dolman. He is the guy in charge of the Wellington letter. He says he writes it all himself, and I believe him. I've known him for a long, long time. He's a hero in Hawaii now. He's a hero throughout the world. Please subscribe to his letter. I think it's less than $70 a month. You know, that's cheaper than 5 cups of coffee. But anyway, you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. The reason we archive them is so you can listen to this again, because repetition is how you learn. But more importantly, can you share this with friends, family, and fellow idiots out there who really know nothing about money, who are not interested about money. And as you heard Bert say, he's a rich man because he was interested in money. I became a rich man because I'm interested in money, because money is freedom to me. Money gives me control over my life. I don't need a job. I can travel anywhere in the world. I can make as much money as I like. I'm technically a school teacher, and I make millions and millions of dollars where a school teacher doesn't. So school teachers are not interested in money because that was my poor dad. What's the price of not being interested? Right, Sarah?
Yeah, and we learned that today with Bert. You end up being taken care of by the government, or,
Get screwed by the government.
And as we learned today, you get screwed by the government.
So, Melissa, we're going to suspend Ask Robert, right?
Right. So today, rather than Ask Robert, we're going to have Ask Sarah, because Sarah runs our social media department, and she fields all the great questions that we get on Twitter and through social media channels here at Rich Dad. But we do want to continue all our listeners to still send us their great questions to Ask Robert at richdadradio.com. So we do appreciate all their questions, but it's a great opportunity today to let Sarah talk to us about some of the social media questions.
And if I could make a point here like this, please subscribe to Bert Dolman's Wellington letter, especially the June 6, 2017 issue, because that's the one that Sarah just read. There's so many questions we haven't answered, isn't it true?
That's true. I mean, I learned so much, but it opened my mind to see what we're not taught on it, or what we're not told on a daily basis.
But also what you need to learn.
Exactly.
Yeah.
I have a huge gap. But I want to make a point about this, less than $70 a month. It's a lot cheaper than some financial mistakes that people can make by not reading. So it's, it's kind of like insurance for your car. It's a lot cheaper to pay for it.
I think the biggest thing is when somebody's BSing you. Mm-hmm. Like, Bert says that he watched CNBC or the Wall Street Journal. Most of that is PR. It's hype.
Yeah.
Bert doesn't sell investments, and neither do I. And he's got no axe to grind out there. But if you take bad financial advice or have a bad financial attitude, which most people do, it screws up your most valuable asset, your brain.
Mm-hmm.
So what questions did you come up for you when you were talking to Bert?
So the first thing, that was glaring for me is we need to learn some vocabulary. And it was back to the fundamentals. As you had mentioned, this letter really is the fundamentals of vocabulary. And it's one of those things where you got to start with the basics to understand the bigger picture. And I think that's a big miss with this generation.
Right.
We don't read. We get our information from the news. We get our fake news. And we mold our mind around 140 characters on Twitter, right? So
that's our president too.
You make a statement and we take it as truth. We don't do research, and I think that was the biggest eye-opening thing for me today.
Thank you for that. Let's tell you how I do it. Is I have a financial dictionary, and when I'm reading a Bert letter or any letter like this, I don't understand the word, then I look it up. You see, the only thing separating you from extreme wealth are words. Words are free.
Mm-hmm.
If you can understand that, understanding the clear definition of the word, that's going to make you rich. Not financial advisors, financial planners telling you what to buy, or the PE is this, or it's going this way and all this. It's words. Words are free. I'm not really religious, but it says, in the beginning was the Word, and the Word was God. Do you know what I mean? Mm-hmm. And the more words you understand, the more God-like you become. So you can sit there and listen to Twitter and twat and all that stuff and listen to idiots like CNBC and financial planners and Wall Street Journal and all this. Or you can listen to people who are actually wanting to teach, not sell. There's a very big difference. What else did you pick up today, Sarah?
Yeah. The other thing that was interesting to me was when we ended the show with talking about Elon Musk and the fact that I know he's your favorite guy. No,
he's a genius.
He figured it out. No, but I think that again, this goes to the misinformation that's out there. Is what he's really doing. And how the government's really subsidizing him.
But you said it earlier, they're concerned about the environment.
Yeah.
Well, the battery pollutes just as much as anything else.
Yeah.
Because,
but that's all the media feeds them.
Right.
This is going to save the earth. And that's why when Trump didn't sign the Paris Accord, that he was the first person to tweet, Elon was the first person to tweet against Trump about this. Because his pocket has something to do with this.
And what did you learn from reading Bert's Wellington letter?
Well, we're all screwed.
No, but you learned that he gets subsidies.
Right. Yeah.
It's always, where does Musk get this money from? Taxpayers.
Yeah.
Where do I get my money from? Taxpayers.
Yeah.
And if you understand that, you'll understand why money is important. I think the most important word that I learned from my rich dad was control.
Mm-hmm.
I control my life. If I can control my money, I can control my life. If I can control my thoughts, my vocabulary, I can control my life. Like right now, there's this piece of property for sale that we talked about with Craig Capola on a previous Rich Dad radio show. And the property is for sale for, let's say, $600,000. But if I buy it, it's worth about $2 million to me. The reason is I have control over the property and the adjacent areas. So while somebody, $600,000 is too much, for me, it's just too little. I mean, I'm not going to pay any tax on it either.
Yeah.
So that's what financial education does. I'm not buying high and selling low because I don't have control. I don't have control of my 401k. I don't have control over the stock market, but I have control over me.
Right.
And that's what financial education does.
Yeah. And I think that's talking about not paying any taxes. You say that all the time.
Right.
Trump said it in his campaign.
Yeah.
And he got hammered.
Yeah.
But I think, could you answer for me why is that a good thing? Because the younger generation thinks you should be paying taxes and you should be paying your fair share.
Right. Because they don't have control over their lives, so they want me to be as pathetic as they are. You want to pay taxes? You pay taxes. I have control over that.
Mm-hmm.
You see, without financial education, you don't have control. You can judge me all you like. I'm still not going to pay any taxes, neither is Trump. He's not going to disclose his financial statement either because he doesn't have to.
Right.
So the point here, ladies and gentlemen, is who's your daddy. Thank you very much, Sarah. Thank you, Bert Dolman, and thank you all for listening.